All right, welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Tuesday, September 6th, and there's a lot going on. Last week, stocks had their third straight losing week. On Friday, the Dow had an 850-point swing and went from positive to negative. The S&P 500 still below key support levels. The Nasdaq has a 6-day losing streak. So what does this mean? Will we test the June lows this month? That's what we're going to talk about in this show. Plus, we will show you our current positions and how we are trading these markets. And we had a lot of action going on here on Friday and this morning. So as you can see, there's a lot to talk about. So let's get started. But before we get started, if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we are real traders who trade live accounts. So we have a lot of trading experience, and we're showing you how we trade these crazy markets. And we've been trading for a long time, so we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And wow, markets are crazy for sure. Look at this, Mark.
Yeah, I mean, Marcus, you mentioned Friday because we did have the holiday yesterday, so U.S. exchanges closed. But on Friday, some big swings there, and you mentioned the Dow. Was it a 850 point swing?
850-point swing. I mean, first positive and then falling, and I mean, it's just crazy.
Yeah, so starting the day positive, but then pulling back and finishing Friday with a loss, and then with a short holiday week, we're going into the week optimistic, but knowing that there isn't a whole lot to potentially move the market calendar wise, and right now the market's looking indecisive, really for that reason, in my opinion.
Yeah, let's take a look at the calendar. And I mean, mainly we have a bunch of Fed members speaking again.
Sure.
So tomorrow, Fed member Mester, then Brainard, then we have Fed member Barr speaking, then Powell speaking again on Thursday, and then we have a few more Fed members. So it seems that everybody has something to say, but it's not that we will hear something drastic new ever since Powell said, we're going to bring this inflation down, we're going to raise interest rates, and we're going to put down the hammer, and there might be some pain in the economy.
Yeah, and that kind of set the tone over the last week or so, and I think that every day since um, oh gosh, what was it? Jackson Hole and Powell's comments was a down day, except for one day, I believe. So sure, you can get some, indecision around other Fed members speaking, and they can say something that gets the markets a little riled up. But really, it's more about Powell, and you mentioned Marcus that he's speaking Thursday morning.
Yeah, and I mean, last week we already had a stronger than expected jobs report, and this morning the ISM Services PMI came in also better than expected, just showing that the economy right now seems to be very resilient to these rising interest rates. So that, yeah, we are not in a recession just yet, it seems.
Yeah, and that's good news and bad news, right? We've talked about it. Uh, we kind of have a backward scenario in the markets where you would think that good news is a positive, but not the case when the Fed is making policy decisions to combat inflation, right? So with their dual mandate, it's price stability and full employment. But right now, they're focused purely on price stability since inflation's got out of control, and with the tools that they have to get prices under control, it could potentially hurt the market, and they could be more aggressive when there's good news for the economy.
Yeah, so this morning, really, right now we see the probabilities for a 3/4% hike, the 75 basis points, stands now at 72%, kind of a little bit fueled by this economic report that came in better than expected. Only 28% probability of a 0.5% hike. But we're getting closer. It's only 15 days left. And next week will be the big one on the economic calendar because next week we have CPI and PPI data again. That's telling us something about inflation and whether it is coming down.
Yeah, so next week, a big week for data. The Fed uses those two, items on the economic calendar, to make policy decisions. And then the week after that, it's the Fed meeting again. So we went a month without a Fed meeting, and Now the 2-day policy statement starts on, or Fed meeting starts on the 20th, wraps up on the 21st. So next couple of weeks, a little more telling. But this week, well, maybe some chop until we get some more data.
Yeah. So yesterday we had the OPEC meeting and talking about that they will cut production by 100,000 barrels per day, but it didn't really affect crude prices a whole lot. Right now they're rather flat, still staying below $90. So that's good. This will help the inflation story. But there's also some bad news out of Europe, right? Because natural gas
Yeah.
prices have been soaring. Did you see that?
Now, yeah, didn't Russia announce that the pipeline was going to be closed indefinitely? Did I read that?
Kind of, yeah, because of a gas leak. But then they basically said no, unless the sanctions are lifted by the, I think they called it Combined West or something like this. So they don't want to have it only from Europe. They really want to force also America to lift sanctions. I'm a little bit surprised by this move here today that natural gas is down 4% after these news.
Yeah, I was going to say that because you would think that with less supply, right? If markets are driven by supply and demand, and you could argue that fear and greed also have a major impact on prices. But if there is more supply, prices should be down. If there's less supply and high demand, it should be up, but down almost 3% or more than 3% this morning.
Yeah. All right, let's take a look at the markets today before we take a look at our positions. And we just see this indecisiveness because at first it was like, okay, strong economic report. The 10-year notes were just rallying higher. And this is where everybody said, okay, Fed will keep raising interest rates. But it seems to calm down a little bit. So I don't know. Is this V-shaped, U-shaped? What shape do you want to call it right now when we look at the 5-minute chart?
It looks like a view to me. But I mean, yeah, back at the open. Hey, and another interesting thing, Marcus, is there's talk about the inverted yield curve. If you look at treasuries, it seems like that's tightening up a little bit, and even the 2-year versus 5-year. So you have the 2-year versus the 10-year, which is often looked at. But now things are, the further back treasury is going up a little bit more, which would be expected. Longer term, notes and bonds should have better interest rates.
Yeah. Well, see, I mean, it will remain a volatile week. VIX still holding up here at 26, so that's the fear gauge. So basically saying, yeah, there's indecision. Never went above 28 here, even with Fed Chief Powell and his statements in Jackson Hole that what they are planning to do will cause some pain in the economy. Yeah, still at elevated levels, but not going crazy here.
Yeah, I'm with you there. So something to note, but it looks like we're kind of, at a, line in the sand. Are we going to really explode more volatility or pull back? And it's to be determined right now.
All right. Let's take a look at our positions because we did have some action last week. So we entered quite a few positions last week, and let's actually start with those that expired worthless. So UAL, United Airlines, we did sell the 35 puts, and they expired worthless on Friday. So we just kept the whole premium. That was one of the expired worthless category. I did the Macy's trade. You did not do the Macy's trade. And this was on Friday, almost a photo finish here because I did sell the 17 put and I think we closed at 17.10. So just 10 cents, but didn't get assigned there.
Yeah, it was interesting, Marcus, because when we did this video on Friday morning, it looked like we weren't going to get assigned at all. And then all of a sudden, during the day, it almost seemed like we were going to get assigned on everything.
Right. So we can kick out of Macy's out of the watch list, UAL. Gold, so that was also a close one, but we did get assigned on gold because we did sell the 15 put. And then it was closing at 14.90. So we both got assigned there. And we'll talk about what we did here this morning. But Google, a completely different story because Google, we sold the 108 put and we closed at 107.85. So I mean, we closed below our our strike price, so we should have gotten assigned. But here's the weird thing: I got assigned, you did not.
That is true, Marcus. And this is a little nuance that not everybody recognizes or knows. And that is when you have an option expiring, sure, the market closes. Technically, everything is settled on Saturday, but you have, as an option buyer, you have the right to execute that option, whether it's a call or a put. And there's 90 minutes after the close for you to be able to execute that right. Now, some brokers, they might decide to use a different timeline there, but it's technically up to 90 minutes after the close. So if there is after hours movement, and if there are some put buyers that say, you know what, I do not want to execute my right, I do not want to sell shares, they can choose to do so. I think at that point, it's really a lottery or a little bit random on who gets assigned, who doesn't. But that's why you ended up with shares and I did not.
Yeah. So let's talk about gold this morning. So since we are assigned, now we can sell calls against our existing positions. And let me just come back here to the screen share. So this is where we both decided to sell the 15 call. And I mean, that's where looking at the 5 minute chart, you basically said, I'm going to do it right away. You did it in the open. So you sold the call. You got, how much did you get for it annualized?
26 cents, which I could plug that in real quick. But for me, especially the first week, I like to get that break even down and bring in as much as possible. So I went ahead and just took care of that. And again, I wasn't assigned Google, and you were looking at Google as well.
Right.
Um, it was 156% annualized with 26 cents.
So, not bad at all here. So, that was good. I decided to hold on because I saw a very strong opening, and then at some point we saw 30 cents. And since you have been beating me by a penny several times, I thought I need to beat you by 4 pennies just to get even. And as you can see, that didn't work. So I did not get filled, and right now we're moving a little bit lower. So right now, I believe that we are trading, where are we trading right now? Around 20 cents?
I think that's right.
Yeah.
Yeah, but you got your Macy's trade expiring worthless last week. I didn't take that one. There were a couple that I was a little more conservative on. So I'll take this win, but overall, it's I think it's still about 50-50.
Yeah, and you see with the markets right now, just showing indecisiveness. Here's the 5 minute chart of the Nasdaq. So I mean, we'll see. Gold could actually rally a little bit, and if we are going back here to the probably 15, 10 level, I might get my 30 cents. So I'm not in a rush here. I'm holding out for the 30 cents here for now. I might lower it later because that's what we just discussed right before the show. Even if I would get 20 cents, it would lower my break even by another 20 cents. And on a $15 stock, that's quite significant.
Absolutely, absolutely. So I mean, I would consider anywhere 20 and above. I mean, any 15 and above is good. But since right now gold's down 0.4%, so
Right.
the metal's down, and gold, Barrick Gold, the stock is pretty much flat at this point. So yeah, you could get a little push.
So we'll see. Okay, Google, I have not sold calls yet. This might get a little bit more interesting as we are going towards the 108. I'm actually kind of thinking that I might want to sell the 109 call here.
Okay.
Because this way, let me just hop over here and show it on the calculator. So if I would sell the 109 call, I would get some decent premium, and I have the possibility of participating a little bit more if the stock moves above 109. So I just want to see what Google is doing here today. Again, I'm not in a rush. Usually you get most premium when we have an up day, and right now we do have a down day in the market. So yeah, kind of Nasdaq flat, S&P up a little bit. So we'll see what stocks decide to do here over the next few minutes.
Yeah, and Marcus, since I was not assigned, I was taking another look at Google this morning, and I did decide to sell the 101. I collected 38 cents for the 101, which is 34% annualized. So I'm just double checking. Yeah, 34% annualized. So I decided to lower the strike and just give myself a little more room to the downside in case there is a bit of a drop, and then I get assigned on Friday. But we'll see. So far, that one's looking good.
Good. So NVIDIA and AMD, not a whole lot to do here right now. So pretty much almost flat for the day. And also TPR looked like this morning it was moving higher, then dipping and also coming back right now. So not selling any calls here right now. These are the other two positions that I have in this account. So for me, it's gold, Google, NVIDIA, and TPR that I'm assigned and trying to sell calls against. Thus far, no calls sold against any of these four. Looking for gold and Google today, NVIDIA and TPR, I might have to wait a few more days. And you have AMD in your portfolio, and then you had the gold puts, the Google puts today.
Google puts the gold position. Yeah. So really looking to sell calls on AMD and LVS at some point, but not right now. And then the Google puts.
Yeah. And I mean, really, selling calls is really what makes the wheel go round. So it's super important that we are getting a sign, because selling calls, I mean, you just mentioned it. How much did you have? 156% or something like this?
Yeah.
That you sold annualized. That's where the real fun starts. So this is why I did a very special video about this, of how to choose the right strike price when selling calls. And I'll link to it right here. Take a look at this, because selling calls, super important for the wheel strategy, and picking the right strike price, even more important. Check it out, and we'll see you again tomorrow morning.
Happy trading, everybody.